Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick. Joel is just a little under the weather today, so the two of us are going to be in the driver's seats this morning. Got a lot to get to on our show. As always, we have earnings, a ton of ratings, some M&A, a couple of pod stocks are listing on the New York Stock Exchange, so maybe that's the top. That won't be today, but it was announced this morning. I mentioned we have a lot of ratings, and we have a couple of guests today as well. Marc Chaikin will join us all the way from Italy. He'll call us at 8:15. He is the founder of Chaikin Analytics, and he'll run us through his thoughts on various sectors in the market he's bullish and bearish on. And then at 9, we'll be joined by Soueidan. He's the co-founder and president of Geo Investing. He'll join us at the end of today's show. S&Ps, another day in the S&Ps. We are mostly looking at my SPY chart here, mostly flat from the close. Dennis, how's it going this morning?
A little bit of a fast market. I got a few positions on. I have 29 positions on, so not as much as I was when we had those really volatile days, but a few positions on. Trying to work out of some stuff here. I just covered a Home Depot short, but anyway, so that's besides the point. We got lots of other stocks in the news, lots of ratings. We've got pod stocks to talk about. Where do you want to go?
Do you want to start with the follow through from yesterday in like IBM?
Yeah, sure. Let's look at Netflix and IBM because both of these stocks obviously got hit pretty solidly there yesterday, and well, from the highs they did. I mean, IBM is not looking good whatsoever. It took out that support that we talked about, and we were saying it absolutely had to hold 137. If it did not, it was going to be in a world of trouble. Well, it opened below that, and it never looked back, and it closed down at 134.05, got down to 133 and change. I'll say it again. This is a stock, I have some egg on my face because I liked it at the beginning of the year. I said, with the blockchain stuff, that I had actually taken a position. I liked it. And then about mid-year, I turned around and went bearish on it. And I turned around and sold my long. And obviously that's been the call since then. So I started in the wrong, finished in the right on it. It's down at $133. I go out to the monthlies and look, and I don't see any real support. I mean, you got some preliminary, you got some, 132, but you got to go back to 2016. You had a low 116 and 118, and this thing looks like it's got some air down to there. I think eventually it's going to test those 2016 lows. So I remain bearish on IBM. Calling it yesterday the GE of the tech world. I think I'm going to call it that again.
Yeah. Anytime you have to go back to 2016
to get lows and stuff, you're hurting.
And then Netflix here. Let's take a look at that one as well.
Well, Netflix a little bit different story because it had the big pop, and now you're coming back into the area where it obviously popped from. I mean, it got up to 405. They faded the earnings pop, so it's 45 points off those highs there now. Can it fill the gap is the question. The gap I'm talking about from the earnings day. The high the day before earnings was 347.95. We're only 13 points away from filling that gap. So that's, the question is, can it get into that gap area and can it fill it? We might determine that today if this market continues to sell off a bit. But I think you're going to find buyers down there in those 340s, though. So if we do get down below 350, I do think there's going to be some buy the dippers down there, as opposed to IBM that I just see air below.
Right. Okay. Something to keep in mind. Those were the earnings from a couple days ago. We'll get to the earnings from yesterday after the bell and this morning, but I want to cover the M&A first, and that is Novartis is acquiring ECYT, ECYT, for $24 per share. I'll pull up the chart of ECYT just so you can see the pre-market action, and only a little bit of a discount here, 50-cent discount.
Yeah, I mean, this is, nothing to really say here. 4.3 million stock. Congratulations if you own it. It's the windfall overnight, 23.5. So they're putting a 50-cent discount on it. It's a cash deal. So that's where that's going to go, is to $24 if the deal goes through. NVS, actually, they're plotting the deal. It's a smaller deal for them, only $2 billion, huge company, Novartis. So it's actually trading up on this. They like, maybe Are looking for different areas of growth here. And you wonder if this doesn't kickstart maybe the XBI or something, so just keep in mind XBI is trading down here, but it's your smaller biotechs. And you wonder if, you start seeing some mergers and some stocks getting picked up, that some of the smaller biotechs don't start to get a lift. So we actually, in the last couple of days, we bounced nicely there. IBB and XBI have actually been correlated quite well together in the sell-off. I don't know. Hard to say. I mean, XBI down to $84, 3 days ago. Now we're up here at 89. Do I want to pay up to 89 on XBI? I don't know. I think this market, like I said yesterday, I still don't know if we're out of the woods. Selling off those, Netflix earnings that hard makes me concerned that there's still a lot of nervous money out there. And that's why I think I'm still laying off the long. So I'm not getting on the bull train here, at least not yet. If that changes, we'll let you know. But anything I see, if I look at the SPY, look at the Qs, yeah, we had a good pop. Yeah, but we gave back some. And yeah, we had closed okay yesterday. But I think you're still going to be a battle between the bulls and the bears. And I just don't think we're out of the woods yet. So I'm still, from a swing trading perspective, sitting on my hands. Obviously, I do a lot of day trades. I don't have any swing trades on right now. I continue to remain uncertain. I mean, you got the battle between the bulls and the bears. You come back, you bounced. But if I'm looking here and I was overweight, I think I would be using the bounces to lighten up, because I think there's still more pain ahead for this market.
You're talking about right now for the IBB, or just in?
No, overall. Sorry, I went back to the market there. So I was in a little bit of a tangent there, but just saying the overall market. And you got to put that in perspective. So I was taking it basically when you're looking at anything right now. Market is driving everything. This isn't like a market that's, not got volatility, and it's still up. The VIX is still trading, up at 18 here. There's still a lot of volatility. If the market turns over, everything sells off. So you've got to have an overall market feel kind of before you're going to make individual stock calls or individual index calls. I think, maybe XBI could outperform, but it doesn't matter. If the market rolls over, it's going down too. So, and if I'm still nervous about the market, I'm not going to take any swing longs right now until I feel more comfortable that the low is in. And I'm not certain of that. And that's why, when we've had such a lift, I mean, if you look at SPY, we bounced from 271 up to 281 yesterday. I mean, you're almost a 50% retracement of the original sell-off. Usually they look at that and say, okay, well, that's the selling opportunity, because stocks move in waves, right? So it comes down, S&Ps come down, they bounce 50%, start to slow down, and then, might continue the merry sell-off here. But it's difficult to say at this point in time. Like, we didn't sell right off. We held the previous day's gains, which is a good sign, but I didn't like that they sold the Netflix off so hard on good numbers.
All right, speaking of biotech and healthcare, and speaking of M&A, we did have a rumor just sort of break the tape here a few minutes ago. Acadia Healthcare, ACHC, according to Reuters, is in talks with several PE firms after attracting buyout interest, and the stock is popping on that headline here.
Yeah, ACIA up at $38 in the pre-market. Or what stock?
ACHC.
ACHC. I had it up before. So it's up at 39. Gets a good lift. This is just rumors, right?
Yep.
Yeah, so, rumors, take them for what you will, but when it's rumors, it's getting a 10% pop in the pre-market. What if it doesn't come to fruition? The thing will go right back down. So usually when there's just rumors like that, if I'm lucky enough to be in it, I usually ring the register, because it's 10% pop. I mean, even if it does get bought out, what's going to be $42, $44? Mm-hmm. Maybe it could be higher than that, but it's a pretty good lift on just rumors. That's what I'll say.
All right, 8:10. We have only about 5 or so minutes before we'll break for Marc Chaikin. So let's hit a couple of earnings reports. We already hit the big movers or the big gainers in the morning. So let's do the earnings from yesterday.
Well, we didn't hit one. And maybe we should, before we go to earnings, why don't we do that YECO, which is Chat was talking about here yesterday. Okay. One of these smaller, little low float Chinese company. Yeah. And the headline that drove it, Spencer, you can read it. It means nothing to me. I didn't even heard of this company before yesterday.
The headline, I mean, they have a PR so much as it's a headline, but it's that they are trying, in the process of selling their China businesses, to devote all their resources to the Millennium Sapphire business they recently acquired. Again, don't know what any of that means. Before yesterday, didn't even know what this company did. Never heard of it, yeah. But it's got a low float here. I can pull it up, the exact number of shares outstanding here in my pro. But this is one that is just.
These low floaters are prone to these crazy moves. It seems like there's
oh my gosh, 2.4 million shares outstanding.
Yeah, and it's traded already 198,000 shares here this morning. I went from $2 to $13 yesterday, closed at 10. It's up at 15 here again. If you're in this stuff, in my opinion, I ring the register because we've seen pops like this before. This stock is, not immune to these crazy pops on these things. And it always seems like they're selling opportunities. And you look at this thing a couple weeks later and it gives it back. I will say, I think if sticking this in your long-term portfolio is the worst thing you could do. Sticking in your swing trading portfolio, day trading portfolio, well, don't get caught. This is a hot potato game here, and eventually that the hot potato burns somebody. And I don't want to be the person burned. So it's up $2, trading up at 15 here now. Could it go to 20? Could go 20? Could go anywhere. But I'll tell you, when the dust settles on I look at this 2 months from now, I bet it's down to $2 again. So play it while it's hot, but don't get stuck in it and then all of a sudden holding the bag.
That was a very good analogy, Dennis.
Thank you.
You're welcome. Hot potato. I like that. All right. Moving on here. Let's hit one earnings report before we grab Marc. So Alcoa AA reported yesterday after the close. They reported 63-cent EPS versus 74-cent estimate. So 11-cent miss there. Sales $3.39 versus $3.36 billion. So a slight beat on the sales, but again, a miss on the EPS. They narrowed their fiscal year 18 sales guidance, and they said on the call that revenues are up 14% on higher aluminum prices.
It's a big pop for Alcoa, a stock that's completely out of favor. I own this in my long-term investment portfolio, so I'm going to be talking against my book once again. There's all kinds of resistance up at 40. I don't know where it got to after hours, but 40 is going to be a brick wall, in my opinion. It's starting up at 38.5. You're chasing it higher. I think this is one that could give it back. I said it yesterday on LRCX. I thought it could give it back. It almost gave it all back. It was 154 when we talked about it yesterday in the pre-market. Stocks that are out of favor when they get earnings pops seem to get sold. Alcoa has been out of favor. You can tell that from the chart. It was $44 at the beginning of the month, 36, 38. Everybody's underwater that bought this thing. They'll be looking to lighten up into the rally. I would not be surprised if this gives it back. So I'm a fader of the Alcoa pop, even though it's in my long-term investment portfolio.
Talking against your book. All right.
I know, talking against my book. And I'm not saying I'm going out there and short. I'm just saying if I hadn't held it for the last 20 years, I probably would be selling into this pop. But I've had it for so long, I'll probably hold on to it.
Fading the pop in Alcoa, and we'll do Steel Dynamics. They always report so late. They reported at 6 p.m. yesterday.
Yeah, I know. We're all like gone home, and Steel Dynamics is reporting.
Yeah. Q3 EPS $1.69 is a 3-cent beat. Sales $3.22 billion versus $3.14. So beats on the EPS and the sales for STLD.
Same story as Alcoa, completely out of favor, getting an earnings pop. It's a little more wild than Alcoa, though. This one can really move sometimes. So just caution to anybody who's shorting. It's only traded 300 shares in the pre-market, but you never know because this one is a little bit of a wild child. Like I can see this thing, going 43, 44, and I think eventually it gives it back, but I don't know. I'm not as comfortable. There's not as much of a defined level as there is in Alcoa. And Alcoa is a thicker stock where I can get out a little bit more easily. Steel Dynamics can just like fly in your face. So I think on this one, I'm still leaning to the short side on it, but I'm probably not going to play it.
All right, 8:15, let's take a quick break, and we'll grab Marc Chaikin, the founder of Chaikin Analytics. We'll be right back. All right, we're back, everyone. Trying to hunt down Marc Chaikin in the background here. He is in Italy, so we're going to I'll try to hunt him down in the background while we do the rest of the show. But Dennis, where did you want to go next? Stick with the.
Well, we got a ton of ratings. We're going to go there in a second.
Yeah.
I just want to talk this trading action Constellation Brands last night. This thing was crazy. So announced CEO change. Give us the news. And I'll tell you about trading action.
Yeah, that is the news. They announced that their current CEO is going to be resigning. Rob Sands. Their current CEO is going to resign in March, and Bill Newlands will become the next CEO when that takes place in March. That transition.
So Constellation Brands on that news sells all the way off to 220 last night. Then it rallies all the way back to like 227. Then it sells all the way back up to 220. Then it rallies all the way up to like 232. And now it's settled here at 226.30, and this is kind of trading like it's not doing anything. So, it doesn't look wild right now. It looks like they were just crickets on this. It was not last night. It was a whipsaw trading action that bounced all over the place. Like I said, got down to under 220, over 232. So you had over a 12-point range, 5% range on this $200 stock. So it was wild last night. If anybody was trading that and fading all the moves, they were making money. I mean, this market, and we've talked about momentum trading. We've talked about a lot of different styles. Contrarian trading is working very well in this market right now. And that is just basically fading moves. When you get a rip up $3, it's selling the rip. When you get a dip down $3, it's buying the dip. And that's what's really kind of been working to a certain extent in this market, because we've had a lot of whipsaw action, a lot of individual stocks. So just keep that in mind. In some markets, momentum, stocks just keep going. Remember, we talked about for years, the ball keeps rolling in one direction. It can't stop rolling. In other markets, and it doesn't apply to all stocks, it just applies, obviously, there's some moves here like IBM yesterday that was just straight down. But I mean, it just seems like the fade trade is back on here, at least in the short term, where when you're seeing big moves, there's money coming in and fading those moves in both directions. So keep that in mind. When you see a stock up $3-4, it isn't paying really to chase those stocks up as of late. It's been more paying to fade those moves, like LRCX yesterday when it was up $9 pre-market, and it gives it all back. Like Netflix even yesterday when it's trading up 65 points on their earnings, and it gives back 2/3 of it. This is money that just likes to fade right now, and that's what we're seeing. And Constellation Brands was a good example last night, where it's down 7, well, they're buying it. Well, it's up 4, well, they're selling it. So the fade trade, I feel like, is back on. I feel like that is what is working right now.
Is Constellation going to continue to trade sort of in line with the pod stocks?
Well, it hasn't really, though. I know they say that, but you can look at that. You can bring up any pod stock against it, and it really is not anything correlated at all. I mean, sometimes you get a little lift there. Yes, they have a big investment in CGC. Yes, but it's a smaller part of their business. So I still think Constellation Brands, from a volatility perspective, is not nearly as wild as any of these pod stocks. It has picked up, though. And it is, some people are calling it a pod play, and maybe to a certain extent on a smaller piece of their business it is. But really, when you start analyzing it and you're looking at, a chart like CGC against, Constellation Brands, like CGC down 10% or 20% in the last couple of days. I mean, you're not seeing that Constellation Brands. You're not seeing it down at all. So, I mean, yeah, it's got a pod business there, obviously, now with the investment in CGC, but I don't think it's a pod stock. I wouldn't call it a pod stock.
It's an alcohol stock, if anything.
An alcohol stock. Yeah. It's a booze stock.
Speaking of the pot stocks, a couple of them have applied to list on the New York Stock Exchange, Afria and Aurora Cannabis. Aurora announced the date they're going to trade on the NYSE. October 23rd is under the ticker ACB. So I'll pull up ACBFF, which is all I can do right now since they're over the counter. But it'll trade at whatever the price is here. It'll trade at the price. It'll just roll over to the NYSE on October 23rd.
Yeah, and obviously it'll be more active once it gets on a regular exchange, because a lot of people don't like to trade them over the counter. And on Canada, it's always very active. I mean, on Canada, this traded 74 million shares yesterday. So it is wild. And I will also tell you, it had the big lift, running up ahead of legalization, and they pulled the rug out from under this thing in the last couple of days. It got up to over $16 in Canada just 2 days ago. It went under 12 yesterday at one point in time. It did bounce at the end of the day, closed at 13.57. I can tell you, it just ticked 14 in Toronto, but it's offered at 13.85. So active market in the pre-market in Toronto is 13.59 to 13.85, which would put it up somewhere about 15, 20 cents. Afria, which just announced that they are going to try to list on New York. If you're hoping for a big pop in this, we're not seeing it in Toronto. It's up 6 cents right now. It is bid up at 1947, closed 1940, or 1941, but 1985 offer there too. So we're not seeing a huge lift here in Afria.
All right. I was able to track down Marc in the background, but I'm going to have to take a quick break and grab him. So I'm going to take two. We're going to go and grab Marc Chaikin from Chaikin Analytics. We'll be right back. All right, welcome back, everyone. I was able to grab Marc Chaikin all the way from Italy. Marc, long time no talk. How's it going?
It's going very well, Spencer. We're here for a month, Sandy and I, and doing business because we can monitor everything with Chaikin Power Gauge. So life is good.
You taking an interest in the Italian markets, or still keeping your focus on what's going on over here?
What's going on over there? We are eating a lot of delicious pasta.
All right. I would hope so, certainly. All right. Marc, it's been a while since we spoke. Let's just catch up. Overall market here. Give us your thoughts.
I think we're making a V-shaped bottom. I don't think it's going to be a repeat of February, March, in that I don't think we're going to drop 10 to 13%, which would require much more time. It's the midterm election sweet spot buy point for a rally into year end. So we do have the futures down this morning. I think at this point, down openings on the futures going forward are buying opportunities.
Which is interesting. Like I'm still torn. So, and I laid out this scenario too. We could have the V bottom. We could have the W bottom. I was actually talking to a Reuters reporter yesterday. I said that exact thing. I'm like, I think it's still to be determined. So I can see, how it could be a V bottom. And I can see, this market's kind of already, nervous. Some investors that they missed the buying opportunity there just 4 days ago. But we know, headline risk is out there too, and something can happen. Maybe we get a couple of bad earnings reports from a couple of key players that could drive us down there too. So why are you confident, or why are you somewhat confident that it's going to be a V bottom and not a W bottom?
Well, first of all, we are torn internally. Dan Russo, our chief market strategist, who, as you know, is a great technician. You've had him on. He is a little more cautious than I am here. So the reason is we had the big spike in new lows. But we got it on only a 6.5% decline. Back in February, we got that spike of new lows when we had a 10% decline, more than that in the S&P, which begs for a W bottom. So I think we had a 2-day selling panic. Last week, they were blaming nothing because nobody could figure out why. This morning, the futures are down because of the Fed minutes. This is old news. The Fed has basically said the economy is strong, and we're going to raise rates 3 times in 19. There's nothing new with that, in spite of what the president's trying to do in terms of talking them back. So it's an earnings-driven bull market. We've already had some bad earnings reports from IBM this morning, from Textron, and the market's punishing these stocks. But the stocks like Lam Research, which reported great earnings yesterday, the banks, particularly the regional banks, and the tech stocks, look at what happened to Adobe, up almost 10% when they're talking about forward-going business opportunities in the cloud. I think that midterm election years bottom in October. As someone once said, Tony Dwyer, I don't know if you've ever had Tony on the show, he's a great technician. He said, everybody says a pullback is healthy until you're living through one. So I believe it's just a pullback.
And then are you like bullish here, like until the end of the year, into next year? Like how long is that going to be, you know, or are you forecasting that out to be?
Into early next year. And I think there's a possibility we could get all the way to 3,100 on the S&P, because if you look at what happened in Netflix, our power gauge rating has been bearish on Netflix, and it still has to get through 380 on a closing basis to really turn the trend positive. But you had a lot of shorts in Netflix, and they got to put that money to work somewhere. There's a lot of money either on the sidelines thinking that we've already peaked or waiting for the W, and I think they're going to be left behind. And what happens in a midterm is that the president and the party in power, in this case the Republicans, does everything they can to help their people get reelected. Now, I do think that the Democrats are going to retake the House based on Nate Silver's 538 forecast, 87% probability as of yesterday. If the Democrats retake the House, that reinforces the bullish scenario. Why? Because we're going to have gridlock, and the market loves gridlock because it hates uncertainty.
All right,
Mark, what about small caps? Downward Dog's knowing about this. Do you like small caps like an IWM you could look at, or other index there over large caps right now?
Well, small caps have dramatically underperformed. I think part of the reason is the belief that the economy, especially in the retail space and some of the energy stocks, is not that strong. I think it's large caps that are going to lead the market for a year-end rally. Typically, in the fourth quarter, when you've been strong for 9 months, the stocks that lead the market for the balance of the year are the ones that got you there. And that's why we're bullish on some of the tech stocks that have been really, you want to look for stocks that have made new highs recently before the pullback. So very bullish on Adobe, Amazon, Visa, which upped the dividend today, and Salesforce.com. Small caps may catch up here. I think the weakness in the regional banks is a reflection of the fact that small caps have been weak. So there's a feeling perhaps that the small cap stocks are not benefiting from the Trump tax cuts. But I would go with the large cap names, and I'd get aggressive here. I don't think it's a time to be defensive. You can make money in a stock like Progressive, which reported great earnings, which could go to a new high, but you make a lot more money, in my view, in the tech stocks. But the ones that have made new highs recently, I don't want to bottom fish in Micron or AMAT.
What about like a Square? Because Square came off significantly, got up to 100, sold 35% off in a week and a half. Now it's bouncing. We're at $77 here this morning. Is that one you like?
I don't. I think you got to watch the bounces. If you want to be in electronic payments, Visa, I think, is the place to be. They do a huge job in Europe with electronic payments, debit cards, appeal to millennials. So it's not, point of transaction, dollar for dollar with Square, but, you use your Visa card or your MasterCard. Square is a great company, but I don't like sort of bottom fishing when the bloom is off the rose.
Mark, question from our chat here also. How does the power gauge compare to your ETFs, or what's the relationship there?
Well, I can't really talk about the ETFs because we're not registered as an investment advisor. We will be in the first quarter. But basically, the index underlying the ETFs, the CSML and the CLRG, are based on NASDAQ Chaikin indices. And the power gauge is the final decider in what stocks get into the indices. And they're rebalanced annually. So there's no trading around the moves or taking profits. So these are indices. In the case of large cap, it's 65 names. Small cap, it's about 220 that are top-down rules-based, and they use the power gauge. So a stock has to be bullish to get into the index that underlies the ETF.
What about Facebook here? Sort of just kind of hanging out on a cliff.
Facebook, I don't think is the place to be. You've got corporate governance issues. There are 4 big institutional investors that are in the news today calling for Zuckerberg to resign. That won't mean much because, of the super voting rights, but and he's still chairman of the board. Facebook is challenged, I think, because they've got 4 different connectivity points. The numbers are flattened. Facebook numbers are actually down in terms of average monthly users. Instagram is flat as well. So Facebook may have seen its day in the sun. They've got to prove their advertising model. I'd much rather go with Google if I wanted to benefit from internet advertising.
And then another question here from our chat, Mark. PayPal, thoughts on that one?
I didn't see the reaction to the earnings. In general, I like PayPal. I love electronic payments. I think there are probably better places to be than PayPal, but they've got great management. And I think they've got to, now that they've parted company with eBay in terms of not being the exclusive payment mechanism, I think they've got to rebuild their business, and that means time. And so I'd rather not wait around in a stock that's sort of chancy at this point.
PayPal.
What's your power gauge saying on Cisco? I just want to jump over to this one because Deutsche Bank came out with some comments here this morning. They're saying that this stock in a bull scenario could go to $75. That's why Cisco is trading up here this morning. It's only up 33 cents because market's down probably. But what are your thoughts here? And what's the power gauge rating say on CSCO? And does this Deutsche Bank $75 target hold any water?
Well, I unfortunately, as you saw, I'm doing this from a terrace of an incredible restaurant overlooking the Umbrian countryside. And Cisco, I haven't looked well. I try to prep and know where some of the gauges are bullish. Cisco actually is a stock that is in so many good businesses. That a major brokerage firm going out on a limb here is someone you want to listen to. I would look to see if it's above its 250-day averages. I think a lot of the stocks here are going to be driven by the technicals, and that's sort of the fail-safe to my market opinion about a V-shaped bottom, by the way. If we close below 2650 on the S&P, then traders particularly have to move to the sidelines and investors need to raise a little cash. We comfortably held 2700. This morning we're at 2,800. That's 3.5% away from even the 2,700 level. So the same thing for individual stocks. If you're buying a stock here, you want a stock that's above the long-term trend line, the 200-day, breaks above the 50, then you've got some momentum going for you. So I would look at the technicals. You guys can probably tell me what the technicals are on Cisco. If you're trading below the moving averages, I would hold off.
I was going to add before that PayPal is due to report after the bell today, and they've beaten the estimates on their EPS and revenue for like 3 years in a row. Mark, one more and we'll let you on. Do you have any thoughts on retail here? Any retail players you're looking at?
Retail, can I use the word sucks?
Yes, you can.
you certainly can. Tell us how you really feel, Mark.
Yeah, right. Let me pull my punches here. Look what happened to the Gap this morning. We've had a bearish rating on the Gap going back to $33, trading at $25.77 on a very weak number. Macy's breaking down here. The retail had its run from not September, but from last spring when everybody was sour on it. And Coors is breaking down, which is a great company. So I think you've got to be leery of retail. Consumer discretionary, for whatever reason. I mean, the consumer is flush with cash. We know that. Question is, where are they spending it? They may be spending it on trips to Italy, on cruises, on big ticket items, but they're not helping Macy's, Coors. TJ Maxx is one that does have a bullish rating in our model, so that's one that I'd be more comfortable with. But if I wouldn't bottom fish in retail here, I'd rather buy Amazon or TJ Maxx. This is a tough market. It's a really tough market. I'd even buy something like a Simon Property Group, which is the creme de la creme of the mall owners. In general, we have bearish ratings on things like Macerich, MAC, but Simon Property Group has had a bullish rating. I think if I want to play retail, I want to do either Amazon, TJ Maxx, or SPG. And SPG is doing a great job of weathering, the big box troubles. And that is the blue chip in the group. Nice yield. I'd go there if I wanted to play retail in addition to Amazon and TJ Maxx.
All right, we've been on the line with Marc Chaikin from Chaikin Analytics, all the way from Italy. Marc, I'd tell you to have a good rest of your day, but you're already going to do that, I have a feeling. So
believe it or not, Sandy and I just we shared a hamburger, and it's the best hamburger I've ever had. And we haven't even seen it on a menu. This is a little place near where we're staying. Normally it's pasta and wild boar ragu, but we just had the best hamburger we ever had. So you can do anything in Italy and trade well and enjoy your profits and take a trip, reward yourself. That's what we talk about on our webinars. If you're making money in the market, reward yourself. It's tough going to trade well, as everybody knows.
Yeah,
and thank you guys for being patient with the call.
It's good to get away every so often, and that's definitely true. Have a good one, Marc.
You too. Bye, guys.
All right.
Thanks,
Dennis, that's a really good point. Just sometimes just get away, man. Just pull.
Yeah. Reward yourself. You know what? I bought a truck yesterday.
You bought a
new truck. Yeah, I bought a new truck. Giving Ford some. Here's the tip for you. Ford's revenue is going to go up next quarter because I just bought a brand new F-150 Lariat. So nice truck. Traded in. I had an older F-150. And it was time to upgrade. It was 2009. So I got a new 2018 F-150 Lariat. Beautiful truck. Get it. I get it Saturday.
Not seeing any trades this morning in Ford. Like one or two trades.
It'll start going up now because Denny bought a Ford.
All right. Got your new truck. Good. I'm glad. See, it's good.
Yeah, it's been a while. I needed to. So we've upgraded both of our vehicles now. We got a Pacifica and we've got the F-150 going. So yeah, we've upgraded. So anyways, let's move on. Lots of earnings to talk about, but the ratings is really in. And the big one Marc just told you about was GPS getting cut to underweight at JP Morgan. I can't understand why this stock up to $33 or $34 in the first place. I've hated it since birth, I think. But anyways, this thing, it broke down 2015. It broke from $45 down in 16, 17. Had the ridiculous run up at the end of 2017, got up over $35. I still think the business model is broken there. I know they got the Old Navy. That's okay. But I absolutely do not like this company or this stock. So I'm a seller of all rallies here. It's getting hit here this morning, down on JP Morgan, but I don't think it's a buy the dip opportunity just because I think this is one of those stocks that I think is broken.
There was this gap in the town that I grew up in, and it was like a Nokia cell phone. It would not die. It just kept surviving. The whole strip mall was dead and empty, except for this one gap, and it finally closed like 2 or 3 years ago. And that was when I knew.
Finally succumbed, but. I mean, those stores the Old Navies are still somewhat busy and they're pretty fancy stores. That's probably their big brand now, right? Because you go into these traditional Gap stores in the mall and they don't seem busy at all to me, but I don't know. I mean, they've obviously, done something okay here in the last little while because they rallied from the 17 up to 34, but I'm just not a fan. Maybe I don't like the clothes. I don't know what it is, but I'm not a fan.
All right, let's move on to some other ratings because we have a lot to get to this morning. Bank of America is downgrading.
Holy cow, they're busy.
They are downgrading like the entire home builders sector today.
All right, run through them.
Toll Brothers downgraded. These are all downgraded to neutral. So Toll Brothers, Pulte Group, NVR, those are like the big ones. Also Union Pacific, Sealed Air, they cut their guidance, but Bank of America is going to downgrade them this morning as well. Norfolk
on the downgrade party here.
Yeah, Norfolk Southern, NSC, Dana, DAN, and
these are all downgraded.
These are all downgraded to Bank of America, but the home builders, specifically Pulte Group, NVR, and Toll Brothers. So let's look at TOL.
I mean, I've talked about these, and every time they've popped on a good earnings number, it's been sold. And we've talked about this before, too. These things just remain out of favor. This is ground zero for interest rates going up because people are not buying big ticket items, and they're not building brand new homes when interest rates start to go up. So when you see the home builders start to get hit, this is directly related to Fed policy here and interest rates rising. So I'm not surprised at all that these charts look like hell. So I don't know, is it overdone? Maybe at a certain point in time, but I'm not going to be the guy that says this is the bottom, because we've tried this. I've tried this in the past before too, and it's very difficult to call where the bottom actually is. So they're downgrading here today. Is it a little late to the party? Oh, for sure they're late to the party here. But I mean, a party could continue for a while. Are we at 9 o'clock at night, or are we 1 o'clock in the morning on the the home builder home builders going down party? I don't know. If interest rates continue to climb, they could continue to go lower here too. So I don't want to have any part of these things until I obviously see, some type of pattern, maybe a green candle on your monthly at least. I mean, you look at the monthlies on PHM and it's red candles just galore here. So let's wait till it starts turning and, get us some momentum on the upside, because the momentum is still very much to the downside on all of these stocks.
All the charts are looking the same too. PHM.
They all look like hell. And I mean, that's
NVR.
interest rates.
Yeah.
That's interest rates right there. So, so you can say, who cares about what the Fed does? I tell you, if you're following the Fed, when they started to go to a, obviously tightening bias here a year and a half ago, you're selling stocks like this. Maybe you got hit at the end of 2017 when I had the big run up, but everything ran up at the end of 2017. This stock, Toll Brothers, started the year at $52. It's now 30. So we've quietly had a 40% sell-off here in Toll Brothers. Every time it's had a good earnings report, it's popped because the numbers are pretty good. But it's the same thing as the autos. Going forward there, are they going to sell as many cars if interest rates are going up? I don't know. That's what the market is concerned about.
And there's the XHB right there, the Homebuilders ETF. Oh, brutal. Exactly. So, all right, let's move on to a couple other downgrades of note. Then we'll get to some upgrades. It wasn't all down this morning, but Yum Brands catching a downgrade to inline or neutral from Evercore this morning. So YUM with the downgrade. And how's the chart doing? Not really. Like 1 or 2 trades.
It's been hot. It comes right back. I mean, this stock is, the opposite. Like, it's been just resilient, and every time it pulls back, it finds buyers. So who am I to say that, this is going to be the top? I mean, you do have a resistance point up at $92. We got up there a week and a half ago, $92.21. We sold off significantly with the market. We've come all the way back up to $91.66. Now we're getting sold off here again a little bit this morning, the downgrade. But trend is your friend here, and the trend is up. So this is the exact opposite story of the home builders. Who am I to call the top in Yum? Not calling the bottom in the home builders, not calling the top in Yum.
All right, and this is one, I cannot remember if we discussed it like last week, but we definitely did on the pre-market show, or maybe just it was Joel and I during the day. But Wingstop, oh my gosh, if you have not been following this one, downgraded this morning to equal weight from Morgan Stanley. But this thing has been, if you haven't looked at this chart all year, this is a monster.
Like, did they invent a new chicken wing or something that everybody has to eat? Because holy cow, you looked at, and obviously you can't look at Buffalo Wild Wings anymore because it went off the board. Right. But I mean, this has been an unbelievable performer. Again, it's the same story. Buying dips on stocks and uptrends seems to work, and selling rips on stocks and downtrends seems to work. This stock is in a clear uptrend. You got the stock down here. I think it gets near $70. If it gets anywhere near the $70, I think it's a buying opportunity. So I'm not going to buck the trend. I'm not going to be bearish on the stock until it starts falling through $65. That's where the major support was in September and October. It held those levels there at the beginning of the month there. So I'm going to say Wingstop is still, bulls are in full control as long as it's above $65.
And if you're someone who's been eyeing the food stocks maybe for potential M&A takeouts, this is one. How much of a premium can somebody buy Wingstop for? They've already, doubled this year. So
yeah, but you look at that and you look at the market cap. So what's the market cap on this thing? Can somebody gobble them up because it's just a small company? It's a $2 billion company.
Yeah.
So it's pretty small. That's the one thing about when you're buying $1 billion companies or $1.5 billion companies. I mean, those are small. So, a big gun comes in, and obviously get PE money that comes in. They can gobble that up pretty easily.
Yeah, I've been looking at some food stocks like Wingstop, like Noodles for maybe takeouts, because we have seen a lot of them go.
Do you like Noodles though? I don't know about Noodles.
Yeah.
I mean, and here's a stock that, and this is one we haven't looked at for a while. It is on the comeback show. I mean, this stock was loved. 2013, $50. 2014, $40. 2015, $20. 2016, $10. 2017, this thing got down to $3. So it is on the comeback trail since the $3 low. Maybe it overshot, but I mean, overall here, this is $50 back in 2014. There's still a lot of pain above. But, in the intermediate, it's in an uptrend right now. But overall, still not nearly as nice as that wing stop where it's things making all-time highs.
I don't like the stock, but I love the food there. So
is it good? I don't know if I've ever ate it one.
I like it. I don't.
That's
all I can. All I can say is I like it. All right.
Oodles and noodles.
Yeah. Let's move on to some of the upgrades or buys this morning. Nvidia was added to the conviction buy list. This is from Goldman Sachs. Someone threw that in the chat earlier this morning here. So pull up NVDA. Usually this is akin to, in terms of chart movement, this is akin to an upgrade.
Yeah, 250. That's the resistance point. It got up there yesterday. I think you got all kinds of sellers up there again. So if it gets up to 249 handle, I think there's sellers there. So I'm not jumping on the NVIDIA bandwagon here because I think it's a little more broken than some of the other tech stocks.
And another one here from Goldman that I kind of rolled my eyes at this morning was Generac, GNRC, upgrading them this morning. Only to neutral, but an upgrade is an upgrade. And I thought, now you upgrade them?
Yeah, and I mean, you're coming towards the end of hurricane season, right? Is that why you're saying that now? Or it'd be nice to upgrade them before hurricane season.
Yeah, that's what I'm saying.
It hasn't really moved much. I mean, really, when you look at this, and in 2018, we started the year at $50 or 56. This is a stock that can be very volatile. Back in July, this ran from 35 to 55. So it can be wild. This is July 2017. So the last hurricane season, this thing went straight up. It never really gave it back that much. And then it did lift throughout the year. But, as we come out of hurricane season, this is a seasonality trade. Mm-hmm. And as you get towards, December, you start, and how long does hurricane season go for? Just remind me.
End of October.
I should have this written down. But
yes, end of October is when.
End of October. In the chat, they're saying it can get as late as December. But, we're coming in. Another few weeks, we start to get, they're not going to be as bad of hurricanes there. And this is obviously gets these big spikes when we have potential hurricanes there. So I still think this is a seasonality play where you buy this thing July, August, maybe, July or August. Let's write this in our calendar. Seems like every time July, August, this thing starts to get a lift. It did it again this year too. I mean, 2016, July and August, it ran from $35 and September ran up to 55. And if you bought it in July this year, you'd be buying around $50 and did get over 60. So, I mean, it's a seasonality play here. So I'm going to just write this one down in my iPhone calendar for a reminder that come July, maybe we start talking a little bit about more GNRC as hurricane season begins. But you're buying it more towards the end of hurricane season here. So I'm not as big of a fan.
All right, a pair of upgrades this morning from Oppenheimer, one on Nike. They're jumping on the outperform bandwagon for NKE.
And you know what? This stock has come down significantly here. I kind of like this call because this stock was very much in favor. I mean, if you got to buy a retailer, why not buy one of the good ones? And this one has, performed fairly well. I mean, compared to some of the other retailers, I know they all had pretty good runs, but $74, $75, I could get on board with that. I'd say, if I was getting on, I'd stop myself out at the recent low of $74. So if you're coming here buying it at 77, you got 3 points of risk. I think there's room to 80. 1-to-1 risk reward I don't really love. I'd love it a little bit lower, but I don't hate this upgrade.
And then the other one was a chart we don't normally look at is USB, US Bank Corp, but that was also upgraded this morning.
And some of the regionals are reporting here now. We had KeyBank report. Yep. We had BK report here this morning. And I think the USB reported yesterday and had a huge lift. So this is just one of those that's chasing basically the move from yesterday. So you're in like regional bank earnings season here. So was there any, this was, we're speaking about earnings. We did the Alcoa one. Was there any other earnings that were jumping out at you that you wanted to cover?
Yes, there was one more, and that was KMI, Kinder Morgan. They reported this yesterday. 21 cents in EPS is in line with the estimate, and sales of 3.517 versus $3.53 billion. So in line pretty much on the EPS and sales for KMI. I don't know if it's traded at all this morning. I haven't looked at the chart.
Yeah, just kind of hanging out. It's not really doing much. KMI is a stock that just doesn't seem to move much at all. I mean, look at the range here for the last 3 months, between 1750 and 1850, talking about a 1 point range. So it's kind of my kind of stock because I like them, a little bit less volatile actually because I can control the risk more. But and I do trade KMI fairly actively, but it's not doing nothing on earnings here. Nucor reported this morning. We had Steel Dynamics. I think you already mentioned Steel Dynamics. They reported last night. PPG, which actually warned about this quarter, reported now the actual numbers. Give us those PPG numbers there because they warned here a week and a half ago. Stock got hit, and now we have the actual numbers there, and it is off or down.
Right. So $1.45 was the adjusted EPS. I think that's what they warned though, because that was in line with the estimate. So it was in line with their warning, and the sales number was 3.8, in line with the estimate, $3.8 billion. So in line with what they warned they would say, I guess.
And the stock just offered 97.50 right now, which would be down 60 cents. Best bid's down 93.12. So we really don't know what they're doing. I always find it funny though when they warn and then they come out and they miss the numbers and they actually hit it again. You sometimes see that, which seems silly to me. I think I'm a buyer down there at 94.95. This thing gets silly because we already knew the numbers weren't going to be that great.
All right, let's run through some tickers from the chat here.
Oh, URI they want to know about. Just because earnings last night too. And this stock actually is getting hit. Give us the numbers, Spencer. This is getting hit.
URI Q3 EPS of $4.74 versus a $4.60 estimate. So a 14-cent beat on the EPS. Sales 2.11 versus $2.02 billion. So they beat on the Q3 figures, but they narrowed their fiscal year guidance a little bit, and the adjusted EPS EBITDA was narrowed a little bit as well. So a beat on the EPS for the third quarter, beat on the sales for the third quarter, a narrowing of the range, the guidance range for the fiscal year sales and EBITDA.
Down $6 in the pre-market. You got to go out. The dailies aren't going to do you any good because we're taking out the recent lows. You got to go out to the weeklies, and wowzers, there's just nothing in there. I don't see anything really until 120 when we had a big run up. Back, we're looking at August of 2017, so just over a year ago, he ran the stock from 106 in 3 months to 160. It was a huge run up. I think you got some support down at 120, but I just don't see a hell of a lot in there. So I'm not coming in here calling the bottom. This one trend is not your friend. It was trending down ahead of earnings, and it continues to trend down after earnings.
All right, let's run through some other ones from the chat that I wrote down. The first one is due to report after the bell today, HOMB, Home Bank Shares. Let's pull them up and take a look.
I don't follow this one at all. So you're going off the charts here a little bit there. 2075 is where it closed. There's no market in the pre-market. This is one of those thinner stocks. And like I said, we're in regional bank earnings season here. So we're seeing a few of them. Why don't we go look at PayPal? They're going to report here after the bell too, right?
Yep. Yes, they are.
We talked briefly with Marc. I own this one in my investment portfolio. I still like it long term, although it's one of those higher beta names that obviously sells off with the overall market there. I'm torn on this one. I mean, I'm down. I'm taking some heat on it here. Wow. And it's such a coin flip. And I mean, you got earnings here too. So really from a technical perspective, it's almost meaningless coming into these earnings. If it does have a good report, I'd say, you get up to the 85 area, you're probably going to have a little resistance. And obviously if it sells off, look at the recent low around 74.66.
Another one.
Then you have,
Yep. Another one from the chat here. Info says they had the earnings couple of days ago. They've given back those gains though already. INFY.
Yeah, it got the pop, went up to 10.50, quickly gave it back. Again, the fade trade works. Just keep that in mind. If you're chasing stocks right now, it is not seeming to pay to chase moves. It's paying to fade the moves. So you've got to understand the environment that you're in, and that's what we try to do on this show is kind of give you a feel for the environment that I feel we're in. And I feel like the fade trade is working for me right now. Contrarian traders who are contrarian, you have momentum traders, you have contrarian traders. Momo guys here were, partying here, I felt like for years. I feel like in the last couple of weeks, at least the contrarian traders are showing some life. So, and I'm going to stick with the theme that, when you see these moves, and, this is a great example of it, these really, exaggerated moves off an earnings report. Sometimes there's some traders that come in to fade those moves.
Another one getting hammered this morning, and this is off earnings, is Textron TXT. They missed on their EPS and their sales for the Q3, 61 cents versus 76 cents, and $3.2 billion versus $3.56 billion. So misses on both the Q3 prints.
TXT. Mess. The only thing I'll say is 2018 had multiple lows in the 57 area. That's $1.50 below here. Maybe a bounce at that area, but you're trying to catch a falling knife here.
Yeah, completely agree with that one. And then one more, Eric. We haven't looked at this one, and I haven't looked at this. What is
that still a stock? Ericsson?
Yeah.
It's been a long time since I looked at Ericsson.
Me too.
Ericsson and Nokia. I used to trade those two together all the time, and now you got I haven't looked at it for a long time.
Yeah,
That's
ADS.
fun.
I haven't looked at this one.
Is there news on that? It's up 3%. Earnings?
They had earnings, 11 cents versus 4 cents, and sales of 5.9 versus 5.6 billion dollars. So look at them beating the estimate.
Good lift. Trend is your friend. Again, remember this is trading actively overseas here right now, so we're already well beyond price discovery phase here. This is a 1 cent market. It's traded 875,000 shares already this morning, so that's kind of already priced it in. I'll just say, if I'm looking at it from a technical perspective, you got up to 911 there just 4 or 5 days ago, so that's where you might have run into some resistance too, although I have not been watching the trade over in Europe, so maybe it's already taken that out.
We'll do a couple more from the chat that they're just throwing out right now, unless you
Sure.
have something else, Dennis. But Lulu, someone's asking about that. They caught an upgrade earlier on Monday, earlier this week, but I don't know when they report earnings. Probably later because it's a retailer. But thoughts here on Lulu?
Looks broken to me. I would say all retailers, and just like Marc said earlier, retail sucks. It kind of does suck right now. So yeah, Lulu is one of the best in breed. And I said, Nike, Lulu, both of those, if you got to buy a retail stock, I'd rather own these ones. But what I will say is this chart looks broken to me. We ran into resistance there just the last 3-4 days around 149 area, 147, 148, actually not 149, 147, 148. We peeled off that, closed weak yesterday. I think we're going to retest that recent low, which is 137.68. And if you take that out, Katie bar the door, it's nothing until 130.
It's funny because was it a last quarter or 2 quarters ago that we were saying, hey, retail is back. Look at that.
Yeah, it cycles. I mean, you got to identify the turns, and it turned a while ago. So, we talk about this stuff, identifying the turns. And if you can be quick to identify the turns in something, there's a lot of money to be made there too. I mean, the majority of our content that we talk about on the show is swing trading. Mm-hmm. And I think that's where most of our listeners are. We like to talk. I have 3 hats, basically. I got a day trading hat, and sometimes I like to give you my ideas for the day, like scalping ideas. Then I have a swing trading hat. And like I said, I don't have any swing trades on right now because I'm torn. You have a battle between the Bulls and the Bears. I'm not convicted in anything from a swing trading perspective. And then I have my long-term investing hat where I buy stocks of companies that I like from a fundamental basis, throw them in my long-term portfolio, and hope that they work out in the long run. Stocks like MasterCard have worked out for me. Stocks like GE did not, which is why I finally got rid of it. So, long-term investing, it's still something I'm maybe trying to figure out even after 20 years, but, I've done okay. I've done okay with it. Day trading, I feel like I've done great. Swing trading, I feel like I do pretty good. And investing, I'm still, because maybe my time horizon is so short, sometimes it takes me out of some pretty good investments.
You're pulling regular hat tricks over there, Dennis.
I am. I got the hat tricks going. So maybe it's the hockey fan in me.
Could be. All right, looking ahead to after the bell today at who's reporting at Atlassian. We have PayPal, which we mentioned. We have E-Trade. We have Skechers, WD-40. American Express. Right. So a number of we're not quite until like the heart of earnings season, but we're definitely getting there. So that is who's reporting after the close today. And that's going to be it for our show. So thanks to everyone who joined us in our chats on YouTube and premarket.benzinga.com. Thanks to our guest, Marc Chaikin. Do want to remind you folks about the Benzinga FinTech Summit coming up November 14th in San Francisco. I'll be there. If you want to hang out with me, you can. You go to bzsummit.com, enter the promo code PMPVIP as in PreMarket Prep, very important person, to get 80% off your ticket. And also, don't forget about Benzinga Pro. It's our real-time news platform with breaking news headlines, an audio squawk, SEC filings, press releases, all in real time. Go to pro.benzinga.com, enter the promo code AM Pro Alpha Mary Papa Romeo October to get 25% off your subscription to Benzinga Pro. And on that note, please remember that all the information on our show is for informational purposes and not meant to be investing advice. Looking forward to the rest of the day. I hope you guys have a good one, and I hope you join us again on